Welcome back to Squawk Box. Rick Santelli here live at CME HQ with the breaking news of the morning. Finally, some real news. PPI, Producer Price Index, for September, a bit late. Headline number coming in, matching expectations of up 0.3. That would be the warmest since it was up 0.7 in July, which actually just a couple of months ago, at least based on this data. If we strip out the food and add food and energy in, it becomes up 0.1. That's cooler than expected. Up 0.1 would be the lightest since it was, well, minus 0.1 last month. And if we look at what's going on, adding food, energy, and trade, we also get up 0.1. Final demand on a year-over-year perspective, up 2.7. 2.7 would equal where we were in May. To find a higher number, you're going to March when it was over 3%. If we look at food and energy, stripping those out, it becomes up 2.6, cooler than expected, 0.2 less than the rearview mirror, which was 2.8. And if we look at finally ex-food, ex-energy trade year over year, 2.9, exactly as expected. This is the only number here that really is, much higher than our last number, 2.8, which was our final. If we look at 2.9 here, 2.9 would be the lightest, well, just since we had the 3.5 in March. Finally, let's go to retail sales. Headline number up 0.2. This is half of what we were looking for. Up 0.2 is definitely on the light side. And if we look at the rearview mirror, we had up 0.6. Up 0.2 would be the lightest since it was a minus number back in May when it was minus 0.8. Now let's take out autos, and we see the number actually moves up. Very unusual. It becomes up 0.3. That would be the best number going back to, well, last month up 0.7. Prior to that, up 0.4, but that was back in July. Ex-autos, ex-gas, up 0.1, still positive, but this is lighter than expectations. And finally, the core retail sales, or what we call the control number, comes in as a minus 0.1. We were expecting a positive 0.3. But to be fair, these numbers have been rather lofty. In the rearview mirror, we have up 0.6. So that was a solid number, but up 0.1 will be the weakest number. And we have to go back a bit. That would be the weakest number going all the way back to August of 24 when we were minus 0.2. There's actually one number left. This is a November Philly Fed non-manufacturing service sector number. Comes in at minus 16.3. These numbers have been negative all year. So minus 16.3 is not shocking. It's actually the least negative since we're in July when it was minus 10.3. The last positive number we had here was October of 24. October of 24. So service sector in Philadelphia, nothing to write home about. What's going on in the marketplace on the 10-year is very important. We're getting very, very close to 4%. We're now hovering at 4.01. That's minus 2 basis points. For the entire year of 2025, we have had 6 closes under 4%. It's a big psychological area. We settled last year at 457, and we heard the Treasury Secretary say, the best Treasury return in 6 years. There's a lot of distortions there due to COVID. The reality is minus 55 basis points is not a huge positive, but it is a positive nonetheless. Many were expecting significant time under 4%. That's why this number and this level is so important. Back to you.